Today, Bitcoin's slide continues as the cryptocurrency dips to $55,000. And Matthew Sigel, head of digital assets research at VanEck, weighs in on those recent crypto price moves. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Bitcoin still hovering around $55,000 by noon Eastern after sinking to that level last week amid Mt. Gox-induced volatility. Ether still traded below $3,000 after attempting a comeback earlier in the day. Solana was just slightly higher, hovering around $137. Now, Andy Baer, head of product at CoinDesk Indices, was on CNBC's Squawk Box this morning to discuss where prices are headed and what's driving them lower.
2024 has been a sort of a two-act play. The first quarter was really a strong uptrend. We unlocked so much demand with Bitcoin spot ETFs. No one wanted to get in front of that rally. The demand worked, the market structure worked, the ETFs worked flawlessly. In Q2, that rally just fizzled. We've kind of been wandering since then, but now it's all about the supply from Mt. Gox and from the governments that have seized Bitcoin. The best news is it's finite, right? A lot of this is cleanup from 10-year-old problems. And we spent a lot of 2023 cleaning up a lot of the dirty dishes from 2022. That was successful. So the best news is there's not enough positive flows to really overcome the supply that the market sees over the next couple of months, but it's finite, and once it's done, then we're free to go up from there.
Okay, let's talk about the top stories. Digital asset-linked investment products have seen a return of interest amid the crypto market's recent decline. According to a report from CoinShares, inflows into crypto-related exchange-traded products totaled $441 million in the past week after 3 consecutive weeks of net outflows. The report noted that most of those flows came from the U.S. market. CoinShares pointed to the price weakness prompted by Mt. Gox, plus the German government's recent selling of crypto holdings, which some investors may have seen as a buying opportunity. The report also noted that Bitcoin itself saw just under $400 million in inflows in the past week, representing 90% of total crypto inflows. CoinShares pointed out that that figure was unusually low and pointed to investors choosing a broader range of altcoins like Solana. And over on the mining front, a new report from Jefferies this morning found that Bitcoin mining was more profitable in June, month over month. Data collected by the investment bank's research arm found that average daily revenue rose more than 9.5% compared to May, as Bitcoin's price increased 2% in June, while the network's hash rate fell by 5%. Jefferies also took a look at trends in the mining space, pointing out that M&A in the mining space is heating up post-halving. The note pointed both to Riot's bid to buy Bitfarms and CleanSpark's deal to buy grid infrastructure. Still, Jefferies lowered its price target on Marathon and Argo blockchain to $22 and $1.20 respectively. All right, back to markets for our main story. I spoke with Matthew Sigel, head of digital assets research at VanEck, to hear his take on the factors weighing on crypto right now, the future of spot Ether ETFs in the US, and more. There was a lot of attention on Mt. Gox last week. So as we head into this new week, what is kind of driving things right now? That was always, to me, kind of more of a short-term driver, but nevertheless, Bitcoin is still kind of hovered at that low that it hit last week, still under pressure, still under that, key support of $57,000. So where are we with the Mt. Gox narrative right now? How long do you expect that to remain, kind of an overhang, and what's going to be driving things in this week?
Yeah, so Bitcoin's now off 23% since its all-time high in March. And just as a reminder of how volatile this asset is, in the 2021 bull market, Bitcoin had 3 20% plus drawdowns. In the 2017 bull market, there were 7 20% plus drawdowns. So we've had 2 so far this year. That's pretty normal in the context of what is a pretty volatile asset. I think the weakness in recent days is due to sales by government entities, including both the US and German government, who, especially the German government, is basically dumping their Bitcoin onto spot exchanges right now. And then there is the overhanging fear of a large distribution from the Mt. Gox estate, and those have also begun. So I think the weak price action is basically spiteful government selling into what was a relatively thin July 4th holiday market. And we've got this overhang of potentially more sales ahead. German government is confirming that fears by hitting the sell button this morning. Recall that Forbes reported this week that Trump advisors were floating the idea of a U.S. government strategic Bitcoin reserve. So that's out there. And then the week's price action could also be the leading indicator of a macro move. That's happened before, but we don't have a lot of conviction in that thesis. So what we're telling clients is that inflation's continuing to decelerate. The U.S. economy looks like it's in the midst of a soft landing. The long-awaited pivot in monetary policy looks closer, and we think the election will catalyze fresh all-time highs in Bitcoin as the market starts to price in 4 more years of deficit spending and potentially a friendlier U.S. regulatory backdrop under that Trump administration. So, dollar cost average, this very volatile asset would be our take here.
What about altcoins? I said at the top I wanted to move to that. There was one point this morning where the crypto market across the board was in the green, and then it was just Bitcoin alone that was still under pressure. That has changed throughout the day. But what should investors be looking at in the altcoin space right now? What do you make of how alts have been trading lately as compared with Bitcoin and Ether?
Yeah, the correlation between these coins for their daily returns is very, very high. And when you're in a normal market on a down day, the large caps, BTC, Bitcoin, and Ethereum tend to outperform. But when you have a large amount of liquidations and selling across the asset class, as we've seen over the last 3 days, then the market kind of flips and Bitcoin and Ethereum can actually underperform because folks are selling what they have a lot of. So I think that's the dynamic that we saw over the weekend with leveraged participants getting liquidated and a bit of forced selling in Bitcoin and ETH. But when you look at the year-to-date returns, it's still majors which have outperformed. We're hopeful that a number of these spot Ethereum ETFs will list in the coming weeks. And so my guess is that majors outperform on the way up as well.
And then turning to the ETFs, we are looking to get some news out of those this week, next week. What are you expecting from ETH ETFs as a launch, as compared to the way the Bitcoin ETFs launched in January? And what would be, considered a successful launch in terms of inflow as compared to what we saw in January with the Bitcoin ETFs?
So without commenting on the specifics of these filings, which are still being updated, SEC Chair Gary Gensler did say about 10 days ago that the applications were going smoothly. So this is, I guess, one time that I agree with his take on crypto. And most independent estimates put the market opportunity for the spot Ethereum ETFs somewhere between 10% and 30% of the Bitcoin ETF market, so maybe 10 to $15 billion in total assets, including the Grayscale Ethereum Trust. I think that the ETH demand, it has the potential to disappoint in the short term if they launch under this type of tape, but over the long run, we think that the market opportunity for productive yield-bearing assets like Ethereum is bigger than it is for inert digital gold like Bitcoin, and many tech investors who are hesitant to buy the mega cap Web 2 giants at these levels, having massively outperformed with relatively high valuations, are going to be open to adding Ethereum as a hedge, looking at it as a play on the open source app store story. That's how we're framing Ethereum, as a competitor to Google Play and the Apple App Store, but with a much lower take rate. And we think that's an attractive alternative for entrepreneurs and developers. And if you just look at the total number of users on these smart contract platforms like Ethereum, they hit an all-time high just last month. So despite the price action, we're seeing builders, developers, entrepreneurs using these open source databases to compete with Apple and Google, and we think that's going to continue. So for the rest of the year, I'd say ETH and Solana will outperform Bitcoin on that narrative.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.